You only need 5 easy steps to trade the forex market successfully. And in this video, I'm going to show you the 5 steps I use when preparing to trade the market every single week. These are the steps I and my students have used to gain so much money in the forex market. These are the 5 steps I've been using to profit from the market week in, week out. So without wasting your time, number one thing you need to succeed in forex or any other trading industry is to have a blueprint. A blueprint is simply the strategy you use while trading. And every good strategy should have 5 basic steps. And those steps are what I will introduce to you. The first step here is that the strategy should have a good multi-time frame analysis, or what I call the top-down analysis. Whatever strategy you use, you should be able to identify the directional bias of a particular pair. From the monthly down to the weekly, down to the daily. Why you need to do that is to identify which direction the market is heading to. Now, let me explain this further. So now, in every time frame, the market moves in a series of higher high, higher low, higher high, higher low, and in a series of lower high, lower low, lower high, lower low in a bearish market. This first movement is in a bullish market. In a bullish market, the market moves higher high, higher low, higher high once it breaks this. Okay, this is a traditional market structure. Now, within the different time frame, we have this movement on the monthly, on the weekly, on the daily, because the market is fractal. But the thing is this: the monthly market might be bullish while the weekly market and the daily is bearish. So at that point, you want to position which time frame do you want to focus your trading around, and that is where the multi-time frame analysis comes in. Now, I have this particular explanation here on monthly, weekly, daily. So let us look at the multi-time frame in a nutshell. I will go to the chart to show you how you do that on the chart. But first of all, you have to understand the anatomy of the market. How do the market move? So we have this monthly, weekly, and daily. These are same point levels, A and B, A and B, A and B, the same price levels across the time frame. But the monthly can get from A to B in just a single move. It could be one candle up to this point. While in the weekly, it might take 2 candles up, 1 down, and then another one up. Up, a high, a lower high, and then another higher high. All right? This is the weekly. While in the daily, still the movement from point A to point B, the daily we have so many movements. A high, higher, low, higher, high. In this case, higher, low, lower, high, lower, low. Now, this push down is simply a leg in the weekly. But in the daily, we have complex move to the downside. So at this point here, while the monthly is still bullish to get to this point, at this point, the daily and the weekly are bearish. So you must position yourself to understand which time frame should you be trading. Are you going to continue the bullish trend, or you are going to change bearish? These are the things that your strategy, your blueprint should give to you. The weekly is bullish now. The daily move to this point, bullish, now bearish, bullish, now bearish, and then bullish. So the best time to trade is when the 3 time frame aligns. That means Remember, market is still moving at this point here. Let me simply put at this level here. At this price level, all 3 time frames are bullish. You can see bullish, yeah, daily change bullish, and then the monthly is still bullish. At this level, the market moves very fast because the impulse leg of the lower time frame will be forming. Okay, these are the ways you look at the market using the top-down analysis. So I'm going to share with you a trade that we took this week on USD card. What was my directional bias on the 3 time frames, and then how was I able to move? So since we're looking at the first step here, I will go to the chart and then look at the market, how it moved. So this is USD card on the monthly time frame. So on the monthly time frame, you can see that the market is bullish. How did I know? Because we broke above the latest reversal opening price here. At first, this reversal opening price rejected the price here, formed a bearish candle. Then we came back up, close above. So this retest and closure above simply means price wants to push up. And in the month of December, we push higher. So it makes sense to continue pushing higher on the monthly time frame. All right. So the moment I understand that the monthly time frame is still bullish, and till now it's still bullish, just in case you want to trade this pair, you can be targeting these 2 highs, yeah, the equal highs as is being known. All right. So then I move to the weekly. On the weekly, you can see the movement within the weekly time frame. When price closed above this, the wick push higher, then came back down here and reject. This is where the weekly also switched to bullish. But remember, we were looking at the trade around here. So my point of interest was around here. I will come to that shortly, but I want to show you the mindset of the trader when you are taking a position to trade. Are you bullish or are you bearish? So from this rejection, I understand that the weekly is bullish. We have this rejection here and closes below. But what happened? Market closed back above. So this signifies that we will be going higher more. Market came retest and then start pushing higher. So the weekly, as at when I took that trade, was still bullish. Then let's look at the daily. On the daily time frame also, from that week monthly break, you can see the daily have a many push up. Okay, this is a typical market structure. All right. Whereas in the week monthly, what can you observe in the monthly? Just a straight leg up. What do you observe on the weekly? Up, down, up. All right. Then what do you observe on the daily? Up, down, up, down, up, down, and then we are pushing higher. The moment you understand that this is how the market moves in fractal nature, you will be able to position yourself to make good trades. Number 2 step to become a successful trader is to mark up your key levels. So once you understand the time frame bias, monthly bullish, weekly bearish, or whatever it is, what you need to do is to mark up your key levels. The key levels are simply areas of opening price, which serves as a support and resistance, or you call it the demand or supply level. These are single price. And if you have not seen any of my videos on the opening price strategy, in the link I will put below a playlist for you to watch and understand how the opening price is being used in marking up key levels. So now we go back to the chart. We understand that the market is bullish on the monthly time frame. So we mark out those levels. We have this level here. We mark it out. This was the only level I can see. As at now, we didn't have this opening price here. Okay. So market has not formed this while I was taking the trade. Okay. This has not been formed yet. The month has not ended yet. So I will not mark this level. So this was the only level I marked. Now, when it happens like that, you have to go to a lower time frame, which is the weekly, to mark levels closer to the price. So in this case, when I come back here, I can see, because the trade was taken this week, so the levels I could see on the weekly was this level here, which price was trading around multiple times, and then we have a break here. Now, because we have a break doesn't automatically means the market will sell. We have to have a rejection after that break, because this was support broken. It has to become a resistance, but it failed to become a resistance because there was no rejection. So because of a close doesn't mean you should change your direction. Remember, your directional bias is bullish. So I'll mark the levels closer to the price. So the second one is here, because now let's be realistic. As this market was trading this week, there's every possibility that it can trade to this level. So you mark this level also. All right. So those are the key levels. I have the ones on the monthly. I have these two on the weekly. So we go to the daily time frame. So on the daily, we were to mark up areas where we would take the trade. As at then, this was Monday, Tuesday, Wednesday, Thursday, Friday. Okay. So this was Monday. So what happened here is that I could see that we have been bullish from this moment here. All right. Now, first of all, you have to understand where the market was coming from. On the daily, we have been bullish here. So I was looking for a way to enter that trade. So what I did was to go to the 4-hour and then mark out areas. Remember, this is Monday. So let me simply put a replay here. And then go to the 4-hour to also mark my key levels. So on the 4-hour, I marked out two levels. Yeah. I was looking at this area for price to come to this area and also price to come to this. These were the levels. And I sent this out to those within my peep hunting signal service. So I sent this out telling them they can take an entry here and an entry here. Two entries. And then we target levels here and then these levels here. So the second thing you need to do as a successful trader is to mark out your levels just like this and wait patiently for the market to come to your levels. Because the truth is, some people lack patience. They will simply, since they know the market is bullish, they will simply open trade here. But what this do to them is that it messes up with their emotions when the market starts trading down. And they can end up closing the trade out of fear and out of pain avoidance. They want to avoid pain. They close that, price tap in here, and then fly up. Then they miss the trade. A very good analysis. They've seen everything, but they were not patient enough. The fear of missing out creep in, and they take the buy trade above the key levels. You have to wait patiently for price to come in. Okay? So that leads us to number 3 point. Now, the number 3 point is what I just explained. Wait for price to give you a setup at your key level. Remember, if you go back to the 4-hour, I have my trade set up already. Yeah. So I have to wait for price to come in and give me a push. At this level, I don't want to wait for any confirmation because I know that the market is bullish. So what I can do is I can put at the back of my mind that, okay, I will monitor this without a stop loss, this first one, and see how market behave, because there's a tendency of price coming here. So I put in my limit order here, I sent out the signal. That is number 3 step. You wait patiently. Patience should be part of your strategy. Patience should be part of your strategy. If you are not patient in this industry, you are going to make irrational decisions. You are not going to follow your trading plan, and you are going to lose miserably. So patience is the number 3 part. You wait for price to get to your level. If you don't trust the strategy enough, just put the limit order with a little lot size and then what? Let it play out. Then once you are done with that, you go to number 4, which is entry. The number 4 step is actually entering the trade. Now, there are two ways. There are two types of entry. You can use a confirmation entry, or you use the more risky entry. Risky entry, and then confirmation entry. What is the risk here doesn't mean is a risk. Just that you want to, is either you wait for confirmation or you don't wait for confirmation. So it all depends on the scenario of the setup. But in the setup I sent, it does not need a confirmation because you are using confirmation to know if price will actually go high. If it was a reversal, price was going bearish, and then you are anticipating a reversal, then you have to wait for confirmation. If you are not anticipating for reversal and you are looking for a continuation move in the price, you don't have to wait for confirmation. So those are the two things you need to wait for confirmation. If the direction wants to change, then you can wait for confirmation to know that, okay, the market needs to give me this thing or this thing, and then I will enter the trade. Or if you know you are just trying to continue trading, you simply take the risky entry. So on the 4 hours, you are going to mark up your price level where you want to enter the trade from. All right, you are going to mark up your price level where you want to mark up the trade from. In this case, I mark out these two levels, this and this. They are quite close. So when price gets here, I will take the trade, or if price gets here. So these are what I was looking for within the 4-hour time frame. I'll simply mark out the levels where I want to enter the trade from. And I sent out this to my pip hunting signal group. And they were able to take the trade 100%. And then we target this level, yeah. I'm going to drop a kind of screenshot to the email that I sent somewhere here. I'll put it here. So from there, we move to the next step. So now is the entry. So in this case, we have to wait for price to come in and then give us our entry. So I'm going to let this play out. As you can see, price only tap into this, did not come down here. And then it went up. Now, that leads us to number 5 step. Because as a trader, you need to maximize that opportunity that you've seen. Why? Because you may not see that opportunity again. When you see an opportunity in the market, that opportunity can either, it could be the reason why you take so much out of the market or you take little out of the market. So when you have such an opportunity, in this case, remember, the monthly is bullish, the weekly is bullish, and the daily is bullish. That is a swing trade idea. Now, I'm not saying you should hold this trade and hold it forever till where the price is. No. You can take your profit at levels, key levels. All right, there's no problem. But what I'm saying is you can add to your winning trade, add to your winning direction, add to the winning portfolio. So on this day, that takes us to the 5th level, the 5th setup step. That takes us to the 5th step. So the 5th step is simply, so that takes us to the 5th step, which is to ride the trend until it changes direction. So now you know that the USD card is bullish. I'm giving you this for free. the USD card is bullish. So all you need to do is to position yourself for more bullish trade setups than the bearish trade setups. Focus on the bullish. When price retraces, you buy. Buy at the key level of opening price, reversal opening price, or continuation opening price. Or you enter at the Quasimodo opening price. If you don't understand, I'll put the link in the description for you to consume the opening price series so that you understand how this market respects those price levels. So what happened here is that I think on Thursday, something like that, we go back to the 4 hour. On Thursday, I did an update. I sent an email. In this case, I sent the email to the general group, general people on my email list. If you're in my email list, you can, please comment and confirm that I sent out this as an update. All right. So what I did was I mark out this level here, and I said you can take additional entry here for a bullish push to the upside. I sent that out. If you know you got those update, put it in the comments so that it won't be as if I'm fabricating all of this, because I reach out to my audience on email only, because I realized the Telegram, there are a lot of scammers that comes into the Telegram, chat people up individually, and then, you know, try to sell them or pretend to be me. But with my email, you know my email address. So anything that do not come from the email address and trying to claim to be me, I'm not the one. All right. So if you have not joined my email list, click the link, join the mini course. There's a free mini course on how I trade, and I'm going to come to your inbox every day from Monday to Friday and show you how trading should be done. Also, if you have not subscribed, subscribe to this channel, share this video so that it can reach a lot of people. And then let's continue. And also, if you're interested in mentorship, one-on-one mentorship, or you want to join the Signal group here where I send out this trade, you can choose the link in the description and join those group. And also, I have a live trading room. You want to be part of my trading room where you are going to see me analyze all of this in real time, and you take trades with me. There's also a place for you. So what I did was to enter again. Yeah, remember we have one entry here. We want to maximize that entry. We take another entry here and push price upward, and that was what happened when price came back in, tap was in, and then the rest is history. Price push high. All right, what I didn't do here was to give you an update to whether to take the profit, but I sent out a take profit level. So this was our take profit level, the second one. So at this point now, you can be out of the market and then wait for another entry. Now see the power of this opening price. See the power of this opening price. This reverse opening price. Price came back again towards that level, and then where did it come to? This level. Back to this level to push price again to the upside. So there were multiple levels entry, but I only sent out 2. I didn't get this because I cannot be on my system 24 hours. All right. After taking out the trade, though I was monitoring another entry, but I didn't see this as at the time when it occurred. So if you have any question concerning how to formulate a blueprint, a strategy, or a trading plan, you can let me know, and then you can also contact me one-on-one via email, and then it will be my pleasure to walk you through and hold your hand to become a profitable trader. I will see you in this video.